Hey all, welcome to Bro Billionaire to another episode of learning and mastering stock market. If you're new to the channel, I request you to please like, subscribe, and you will never be disappointed with this channel. I will promise you. Now, what are we learning today? Today we are learning something called as Guppy's moving average, GMMA, Guppy's multiple moving average. Okay, it's a popularly a it was made popular by Daryl Guppy, who is an Australian financial columnist in one of his book. And what exactly are these Guppies? Guppies is a set of 12 exponential moving averages, faster versus slower EMAs, and it's pretty simple. A set of EMAs are used, and whenever they cross over, it generates a buy or sell signal. So hope this is uh, this information should be sufficient for us to move on. Now it's available in TradingView. What I'm using Guppy. You can watch this, you can search for Guppy, or you can go here, indicators, GUPPY, Guppy. The first one is locked. You can use the second one, 930. Guppy is moving average, and you can leave all the settings as it is. Suppose if you don't have TradingView, or if you're using more than three indicators in TradingView, you won't be able to use it in a free account. You need to subscribe, but there's an alternate. You can go to Zerodha, you can go to investing.com, and all you need to do is add 12 exponential moving averages and change the settings. Now, if you go to settings, you can change it whatever EMAs you want. You can go inputs 3. You can add and change the color settings. Now here I have made green and red. You can keep it that way. All right. Now what are we learning? This is Bank Nifty chart. I just wanted to show you a few things, and there is a specific way to trade this, which I'm going to teach you. And please understand, this is not for someone who is using price action trading. You can follow continue price action trading and use it if you're a pivot practitioner with 20 simple moving average. Stick to it. That is best. Now, this method which I'm teaching you today is for all the newcomers and the beginners who are learning. And if you stick to the discipline, you will definitely make money. All right, I'm going to teach you some of the tricks of the trade on how to use this. Can others use this? Of course, it's you're free to use this as long as you're comfortable, but keep your trading system simple. That is one tip which I would like to give you. Now, before going further, if you like the concepts and if you're watching all the videos on our YouTube channel, please hit the subscribe button, like, encourage us by your valuable inputs and comments. But tomorrow I'm going to bring you another mind-blowing indicator trading. Today this is going to blow your mind. Now just showing you, right? These are the faster EMAs. These are the slower EMAs. Now faster EMA crossing, market will trend to go high. Now, as long as they are wide apart. When the moving averages line starts growing wide, that means strength is becoming stronger. And at the same time, when the slower faster EMA starts converging and come closer, that means trend is changing, and you need to anticipate a crossover. When all the lines cross over like this with this EMA. Now remember guys, moving averages or EMAs, they're all lagging indicators, all right? Which means that market would have already moved, and then this would be generating a what do you call sell or buy signal. Although Daryl Guppy says that it is not lagging, it is going to tell you what's happening beforehand. Now most of the people, the way they like to trade is using RSI or stochastic. Now this is trend is going down, right? They can draw the trend line as well. Say on this particular day, they use this particular method of trend line where they know trend is ending. Now with this peak, you know the next trade will be only above this based on price action, right? And when you watch these faster EMAs converging, you know the strength is falling. And also at the same time, when you start marking the RSI, you know, at the bottom. Why my mouse is acting crazy? Okay. See, you here also, it is aligned with the chart. Not a negative divergence, but you know that the momentum is dropping, right? That is what you need to know. The momentum is dropping. Now, Along with this, when the crossover happens, this is already giving you a hint. Since we are in option trading, as per the Guppy trading methodology, you need to wait for the complete crossover. This is discipline one, and when you wait for the complete crossover, you can capture this big money. What is your stop loss? The previous peak high, or 1:2. Once you book 1:1 or 1:2 profit, you need to exit and you should not trade more. That is the way this should be trading. All right. Now, let me go ahead and remove these lines. For some reason, I think my system is getting overheated. You can see the slow movement. Now for this, all right, there are some strict rules which I would like to implement here. It's not that you know how moving averages works. You have super trend, you have moving averages. What will you do in this situation? It is going just sideways, right? Whenever it goes up, you can still scalp. But if you wait thinking that market can go up, it will come down and it's going to hit your stop loss, right? So for this, we will use Cambrilla pivots and floor pivots and CPR. You can use any one of it. So today, which this floor pivot, and also, I don't want to add this confusion, but let me explain this and then I will tell you. Otherwise, you guys will get confused. Now, this is the CPR settings with pivots. There's nothing else. Guppy and CPR. What are the rules? The rules is, remember, if the crossover is happening at the CPR or near the CPR, even with the gap down, you can take the trend. Now, as per the pivots, below S1, above R1 is what? Breakout, right? Now, this will help you to capture that. Yes, on this particular day, gap down below S1 went down. Even if you are afraid, these settings will tell you you can continue the trend. And what will be a stop loss? The stop loss will be whenever a candle closes above these green, complete green, they need to converge and closes above it, momentum is dropping. This is where you will be exiting. Near CPR, understand, near CPR. Do you see this? Near CPR, gap up. It's not above R1, but you have a high probability trade to continue. See, none of the candle closed below. Here, one candle very slight, you could exit here and then you can continue the scalping, and that's all. And below, when the crossover happens, after this candle, you will be entering here. All the lines should cross over. That is when the trade triggers. Now I will just walk you through. You can watch the RSI trend line, everything, because I have shown how to use the RSI trend line with pivots. You can use that. It will have very high probability. Now the rule number two, first rule is what? Near CPR or at the central pivot. Early in the day has high probability, like this. Watch this one. First 5 minutes, boom. And even after the day, if it is crossing after midday or later in the day, if the crossover happens near central pivot range, it is always a probability. That is the rule number one. Got it? Now rule number two is above R1. You have to watch above R1, wherever. See here, this is above R1, right? I think I had marked some tailor-made setups for you so that you guys can watch it. But for some reason, I used delete button, right? So it went off. Just bear with me for a minute. Yes, now. Okay, let's watch. No need to worry. You have to be patient because you're learning something new. All right. Watch this one. This one I marked near central pivot early in the morning. Crossover has happened yesterday, but near central pivot, you can see a clear crossover with the big candle right the wave until here. This will be a stop loss. If you book somewhere here, do not overtrade. Now your next trade, see here, it will trigger somewhere here with this candle. They're all moving average. It won't get triggered with this candle, but when all the crossover happens, you can still scalp. It's one of the very beautiful things for a beginner, where if you stick to the discipline, you will make money. There's no way you can lose money. See here, It comes, and this is another setup. The second thing, when market gets stuck in a range, remember, get stuck in a range, it is taking support near some pivot, and after the range, one high, two high, three high, range breakout, and if the crossover is happening, it is a buy. Your money should be there. Do not worry about now. Do not worry about these things. Below R1, below previous day, sorry, monthly low, below and between previous day high, it's a range bound. But still, if you want to scalp, you scalp. But my rules are rules. I want you to stick to the rules so that you can make money. Central pivot range, it is crossing. Second candle entry. At least you can capture this until you get a morning star. Below R1, you know you have to exit if it is not sustaining. Now watch this one. When does a bank nifty gives explosive moves above R1? Now since last 2-3 months we are in kind of range, you don't see it, but whoever is trading bank nifty since last couple of years, you know that frequently it gives you 300 to 500, sometimes 700 points as well. Above R1 first candle, you know this will show you in the morning. Boom, take the risk, enter. You got your money. Watch this one. Above R1 comes, you have a big red candle, but the Guppy is telling you it's in uptrend. You cannot think short. Even if you're wrong, you're on short side, it will guide you. Look how the momentum has increased. Once you enter here, boom. Where is your stop loss? Do you see anywhere hitting stop loss, the candle, red candle closing below these green lines? No way. So you can continue entire day and make money. And remember, since it's a moving average, it's going to take some time for you to master. I'm not telling it's going to be easy. Now, the way you need to trade is any method, guys, any method. Trading psychology is 80%. These technical things anybody can learn. I'm telling you, there will be a lot of people like me, a beginner. Once upon a time, I used to think, if only if I knew the market structure, I'm going to mint money like anything. No, I am making profit. I double my capital from 50K to 50K month on month, month on month. But that minting money, it's trading psychology. Even I am suffering from trading psychology, maybe slightly better than most of you guys. So that's the reason I'm asking you, just join our channel, ride the wave along with me, learn along with me. You will never be disappointed. For last 1 year, I'm making consistent money. Every month I double my 50K month on month since last year, and I have shown my profit and loss sheets in previous videos. So please like again. I'm reminding you, watch this one. Above R1, trend is up, near CPR, opening, money. Got it? First rule, near CPR. Second rule, whenever there is a range and if it is taking support near a pivot and then a crossover happens, you have to buy. This is near central pivot, wide CPR, so not much money. So because the crossover was already very wide because of gap up, and on this day I'm telling you, you have to wait. This one hit hit stop loss, but here it gave you the money. Watch this one. Just give me a minute. I think my spotlight is not working. I don't need the spotlight only, right? Okay, watch this one. Crossover at the morning, always probability. So this is a range. Okay, we are in uptrend, but we are in a range. So here, I think we don't have any trade. If you have entered the trade, it should be above the high of the first candle, right? Simple common sense. Somewhere you enter, it comes down, hits your stop loss. So this is to show you it hits your stop loss. Stop loss is a must for any trade. And these are moving averages. So sometimes in a sideways market, it gives whips off. But what I'm trying to tell you is, if it is above R1, you need to be thinking buy only. And is the green lines above the red lines after hitting the stop loss? Yes. Above R1, slowly you might have seen so many days it will be ranging in 10-20 points, 10-20 points, but by the end of the day, it would have moved around 200 to 300 points. And you would be thinking why I did not hold, because market goes sideways 60% of the time and trend only 30% of the time. So this is above R1. It's in the range. If you're thinking above R1 as buy only, it will go. Similarly, you can use the same tactics with Cambrilla near S4 and below us above R4. See, central pivot range. It comes down, it breaks. Whom does the upper CPR belongs to? Bias. And if you just think this is a scalping range bond, but you will still make money. Got it. So this is exactly what I wanted to tell you. So there are three setups. One is near the central pivot, near the open, and even in during the day, if it happens above the central pivot, you have money. You have money. And the other thing is whenever the market gets stuck in a range and when the range gets breakout, you have money. Now along this, since it is new, okay, as a newcomer, you have to stick to the rules. So it comes here, goes up, it breaks, you will enter here until a red candle closes up, sorry, green candle closes above this. Somewhere here you will get to know this is an inside bar, it's going up. Okay, let me take the profits here, end it. You will wait patiently because market is all about patience. You just crossed over, you will enter, you will be scalping. Now this is an option. The what I'm going to teach you now is it's an option. Now I use 20-day simple moving average with pivots, everything, right? Now, how would if you use a 20-day moving average? Will you get confused? There is all possibility that you may get confused. The red thick line is 20-day simple moving average. Let me make it, what shall I make it? Black? No, I'll make it blue so that you can see. So this blue line, the blue, I'll make it thick as well. Okay, this blue line is the 20-day simple moving average. Okay, I'm making it very thick so that you can see. Now what, as per this 20-day simple moving average with the pivots, if you have seen my previous video, below 20-day is selling, above 20-day is buying. And with central pivots, you can think which side market is going, right? Now, if you use this guppies, you can exit somewhere near the up. It will come somewhere here, exit. And it may also give you a quicker entry because all these lines are getting converged. If you are a risk taker only, what would be your stop loss if you enter here? Not the low. It will be below the 20-day moving average. Instead of waiting for all the moving averages to cross over EMA, this 20-day moving average will give you a better entry. If you know, if you're a risk taker, and this can be confusing. I'm not asking you to use it, but if you have a little bit of experience, it will tell you, see, the crossover has happened below 20-day. You are more confident, you can hold your trade. Crossover has happened, market comes down, this candle closes below these two candles low as well, near lower CPR, but the 20-day moving average is holding. Once it goes up, another red candle breaks 20-day moving average, but the crossover has not yet happened and it is in between the CPR. So it will give you a kind of indication, wait, let's wait until a candle closes below or the lower CPR and crossover happens. But look what happens after that. It starts hugging 20-day moving average. And if you see clearly, on this particular day, these are the tricky days, right? Where we are most afraid. After 1 hour, see, the lines are up. It will tell you we are still in the uptrend. And once 20 days starts holding, look at the explosive move. Boom, big explosive moves. Yes, on that day, we had 2 explosive moves. After going so high, it took support on 20-day moving average. Next candle came and broke this jumbo candle, right? This jumbo candle is below 20-day. You know, okay, all these green moving averages have converged once, converged twice. Instead of bouncing up, it's going down. If you have booked this profit, you need not worry. This is a pivot taking support, crossover below. So if you're a price action trader, you can enter here. But how many times we will get this kind of moves on the same day? So probably on this particular day, the safest way, even I'm an experienced trader, I would not look to sell here. Probably after this candle is taken out, I would look, but I'll be too afraid. I'll be too afraid to take, I would be going for scalping rather than waiting. But once all the moving averages crossed over, it will give you a confidence that something is wrong is happening. You can hold it below 20-day and capture these big moves. See here, another one. market opens near S1, below S1 is trend, pulls back about 20-day, but you know the lowest CPR always belongs to sellers. And the crossover is so wide, it converges, but this green candle fails to break this one, going above this red EMSH. So since it is down, our view should be always downside. We will just wait for candle to come below. It's below CPR, right? It's below CPR. We'll wait for a candle to sustain or close below 20-day moving average. What these two guppies, okay, down. Let's take the trade. You can scalp. No, I'm definitely no. This will be confusing. That's the reason I said the 20-day moving average should be used only for experienced people. If you are a new trader, you don't need anything. I want you to stick to this as a discipline. That the whole purpose of this video was for someone who knows what is pivots, someone who knows based on my levels above R1 is a breakout, okay, below central pivot, I need to look to sell, or below S1 is sell, but you're afraid. For them, if you use this Guppy's indicator, it will give you a clear idea which side the trend is, and you can wait patiently to capture that big amount of money. Yes, you enter here, it comes, you'll be afraid near a pivot, you have a double top W kind of pattern, it goes up, but it will stop you to look for counter trade because we have a big gap. It is downtrend. This will show you even visibly, hey, we are in downtrend. Why should I look for counter trade? Your mind will tell you, and you will wait only to take the trades with the trend. And once this red candle broke below, you know, yes, my stop loss is above this. Market is below S1, below S2. Let me enter and hold it tight. Even in this sideways market, you'll be disappointed because your option money is not moving, but you will never think that you want to take a counter trade because this will keep you in line with the trend. And with practice, you can capture big points. Hope this video was helpful. I wanted to show the chart, so I spoke a little more. The reason was once you start using it, there will be a lot of questions and little bit confusions in the real-time market. Everything looks green when explaining, but I just wanted to tell you the methods. So the three setups you need to use is, see, this is a range bound. In the range bound, wait patiently, and whichever side range breaks, along with Guppy, take the trade. Near central pivot crossover is happening, high probability. Above R1, below S1. Only keep it simple. These are the only three setups you need to remember. And once you practice this, I'm sure you will never be disappointed. You're going to make more money. Thank you all, guys. Have a good day. Bye-bye.